Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Tim, the markets are doing surprisingly well to many people. Why are they hanging in there?
Surprisingly well they are. Well, let's talk through it. We had the largest financial bubble in history, and it all happened on the back of the worst economic recovery since the Great Depression. I've talked about that, and I've said it based on hard data, which we've discussed here. And then, finally the technical setup occurred. It fell into place. We watched it in January, February. I discussed it in the letter and the short-term updates as that structure finally fell into place. And then we watched in real time as the market, the first phase or the first leg or the unwinding began to happen. We saw a Dow theory primary bearish trend change. All the structure fell in place. And then, we moved into the March low. The reason there was such a disconnect with the underlying economy, and I talked about again, why the market was rallying into the largest bubble versus the underlying economic data that we talked about relentlessly, why there was such a big disconnect was simple. It was manipulation. I mean, that got kicked into high gear in following the 2009 low. And it only got worse as the market, continued higher and became increasingly harder to hold. We saw coming out of the 2009 low, for example, we saw QE. Anytime the market would stumble, we would see fake news. When I say fake news, they beat it to death for nearly 2 years on the China deal. Every time the market would stumble a bit, we got a China deal, It became comical. It became predictable. They would sell the public in the marketplace on that lower interest rates were better, or that they were good, I should say, when in fact that's not the case. And so we had all these different means, if you will, of manipulation as the bubble grew increasingly larger and larger. And so that's what I mean when I say manipulation and the disconnect between the stock market and the underlying economy. Anyway, that aside, we saw the setup in January, February. We finally got structure. All this time, we finally got structure in place, and the market did exactly what it's supposed to do based on that structure. It began to come unwound, and we saw, as we saw the market move into the first leg down, or what should be the first leg down in March, we also saw the biggest stimulus package ever. More QE and the fun and games began. Well, now, here we sit, and the reality of it is that it comes down to how well they can hold the market with these methods versus the natural forces of the market. And when I say the natural forces of the market, I mean, there's no question it was a ginormous bubble. There's no question that the structure fell in place, and there's no question that we still have a primary bearish trend change in accordance with Dow theory. So how well can they hold this versus the natural forces of the market? And that's where we're at. And the fact is, just like we saw in 2000, and I didn't mean to say that, but it's true. Just like we saw in 2000, in 2007, and in January, January, February, once the structure falls in place to cap this advance, then, that's going to be the opportunity for the next leg down to begin. Until then, this rally is going to continue. We have to see the technical structure fall into place to cap it. And the reality is that this advance has absolutely nothing to do with the true state of the underlying economy. The economy is absolute toast. We all know that. And we have an even greater disconnect now than we had before. So, that's the reality of it. It's the fun and games continue, and until we see structure to cap this advance, then it is what it is. It's going to continue.
Tim, with billions, even trillions of dollars of stimulus being added to markets around the planet, will this have a long-term positive effect, or is this effectively money that's been thrown away?
Well, that's the great experiment. Could they even push this to a new high, or do we see the top this week or next month? We don't know, and neither do they. That's the experiment. It's going to continue. That's the beauty. That's the frustrating thing, and it's also the beauty of of technical analysis. What they have been able to do with these cycles and the structure and so forth is they have been able to prevent those natural forces from setting up, and by extending it and extending it and extending it. Every time you try to get it set up, they come out with their news or whatever, and they've extended this thing into the bubble that it is. But on the flip side of that is that ultimately we did see the setup. We saw it occur. I wrote about it. I told my subscribers about it. We saw it when it happened. And so the reality is like I said, I know that doesn't sound like much of an answer, but it is. It's a tremendous answer. We will see it when it happens. They don't know how much longer they're going to be successful at this, and neither does anyone else. It is an experiment that has never been done before, and it's happening on the back of the economic numbers. We talked about this, last year going into this thing. It was without a question the worst economic recovery since the Great Depression. But because they were able to keep the stock market up, pump them, and through the methods that they employed, then, they could point to the stock market and tell us how great the economy was when it wasn't so. And so it's the same game here. How long can they keep it up? I don't know, until we get the setup.
Now, I know after the last recession and downturn, a lot of people felt that government bailout money was wasted. The company should have just been allowed to go bankrupt and let somebody else pick up the pieces and carry on. It's not like we wouldn't have airlines or cruise lines or other companies afterwards. They'd probably be restructured, the debts forgiven, and carry on. Should the same thing happen here? Should companies get billion-dollar bailouts, especially after they have already spent billions buying back their own shares?
You took the words out of my mouth. I was about to say that. No, especially after the stock buybacks and so forth. But, that's the part of the, one way to look at it, I guess, is the too big to fail type thing. That's because you're in the big club. And, the average small business owner who, running his restaurant or whatever his business is that's been shut down, unfortunately, those businesses are going to fall to the wayside. But the ones who, in my mind, acted irresponsibly, buying back their stock and so forth, that get all the bailbacks because they're too big to fail, that's just the way it is. That's part of, I think, what is going on with the nationalization, if you will, or socialization, if you will, of big business. That's where we're at.
Does free enterprise really rule anymore?
I think it's on thin ice. I mean, when you don't have a truly a free market with the kind of shenanigans that we're seeing, is it really free enterprise? I mean, is it? Is it really free enterprise when you're told to go home and shut your business down because of some kind of a virus? I say not.
We'll have more with Tim Cyclesman Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, one of our regular contributors, Mike Swanson, said he's heard that the Fed in August might bring in measures that would keep long-term interest rates down or bond returns. How could they do that, and why would they do that, and could they do that?
Well, you know, I would, my mind goes a couple of directions on that. I mean, number one, the Fed controls the short end, not the long end. The long end has always been there to checkmate them. And let me give you a hardcore recent example that we can probably all remember. Back in 2018, remember when they were talking about raising rates, and they had some pretty tough talk, and they had started making some rate hikes, but the market allowed them to do that. The short term, we've talked about this before, but it's a real simple matter. You can look at it a couple of ways. You can do it in a spreadsheet, and you can look at the short term T-bill rate versus I use the I'm drawing a blank, the discount rate. You can also use the Fed funds rate. And you just line the numbers up in a column. I've got it going back into the 1940s, or you can do it in the form of a chart, which I've done both. And you just overlay the two, and you can see the Fed follows the short-term markets. And a lot of people don't know or understand that, and I think it's because the Fed has done such a good job on trying to convincing people that they set those rates. And to some degree they do, in the sense that the illusion is reality. If I tell you something in the marketplace responds to it, then I've created the reality, the false reality, if you will. But the reality really is, when you look at it, when the market, gets to these turning points and the cycles bottom or top, whatever the case may be, then, the market ultimately rules. And you can see that even today, clearly going back into the 1940s. An example of that was, in 2018, they wanted to cut rates. They were saying they were going to raise rates, and talking tough and how great the economy was and all this kind of thing. But then the bond market hit a 3-year cycle low in October of 2018. Bonds bottomed and rates started to decline. And if you'll remember, in December, they did an about face. And I think they may have made one more, I'm fuzzy on my memory here, but I think they may have made one more hike in December, which was kind of the nail in the coffin, and then they did the about face and they started cutting. And long-term rates started declining immediately following that cycle bottom in October of 18. But it wasn't until like May, as I recall, I'm not looking at a chart, April, May, that the short-term end started to decline. And that's what forced them last year to start being aggressive with their cuts. And so that's a real-time example of how the bond market actually forces their hand. Now, that said, what I see here, to his point, is what I see here is the possibly, I don't have, the structure's not in place. Let me clarify. It's not there today. But what I could possibly see happening is that if bonds were to move into that, a longer term cycle top, let's say in the summer, and start down, then the inverse rates would start to creep up. The Fed could come out and say, that they did X, Y, and Z to cap the long-term end and create the illusion that they did, when in reality the cycle turned, because they can't control the long end. They can't realistically control the short end other than the illusion that they can control it. But they can't control the long end, in my opinion, and unless the cycle turns and then they throw out the notion that they controlled it, no. And if that cycle doesn't top, they're not changing that. So that's something we can watch. The structure of the long-term bond market as we move into the summer versus what they say and do, it'd be something cool to watch in real time.
We'll have more with Tim Cyclesman Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, have we seen the peak in gold, or is it going to just slop around in about a $100 trading range?
Well, that's certainly what it's been doing. And as you know, we've been looking for this 9-year cycle top. It has tried and it won't bite, and it has tried and it won't bite. But then at the same time, it hasn't mended anything either. When I say won't bite, the structure keeps trying to fall in place. We have to have the right structure, as I said, just like any other market, to cap it. And, it has made the attempt, but then it fails. The attempt is, while we've been moving sideways here for 2 months in gold, like you said, just kind of trapped in a range, it's still trying to set up with a top. And when you look at, like I said, these long-term historical relationships, and you look at the cyclical phasing and all the other cyclical historical precedences, you just can't throw the baby out with the bathwater and say this time is different. Everything points toward a top here trying to be made. But again, we got to see that structure solidify, which we haven't seen. And so that's something that I am following and reporting on in the letters and the short-term updates. If we get that, then once that structure is in place, then the longer-term relationships and the 9-year cycle top will be in place. And I think gold should go down fairly hard. Until that happens, hey, I guess it continues to linger here until we get the setup. The danger is that just like with equities, the longer it holds out, the less people believe that, they think, well, this time is different, or, it's not going to correct, or you're just wrong, or these historical relationships don't matter anymore, or, the cycles are broke, or whatever. And it's just that it just hasn't come to fruition yet. But anyway, I'm still looking for a 9-year cycle top, but we need the structure.
Tim, what's going on with oil?
Counter trend bounce, it should be. We had, that's something that you and I talked about all along. That's one of the longer term relationships. And when I say relationships, I'm talking about with commodities in general. We knew that we should be seeing lower commodity prices, including oil, and we beat that to death. As oil held up last year, I talked about it, and said that this should be counter trend. It should be counter trend. Oil should be going lower. Oil should be going lower. And, it got to be a broken record, just like with crude oil. I mean, just like with gold here. And finally, the setup came, and it did crack. And so, I think that this is counter trend in oil, just like it is with equities, because there's no cycle lows due at this point. The longer term structure is broken. When I say there's no cycle lows due, there's no longer term cycle lows due. And so I think this is an intermediate degree advance, and that there's further weakness out there in the oil market, the commodity market in general. And if that proves to be the case, then I would suspect that that's when maybe we see gold this time crack with the next leg down in commodities.
Tim, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.